Okay, let's get started with a bit of structured warrant background and info first before we move on to next technical analysis. Okay, so what are structured warrants and what does it do? Okay, I understand that probably many of you already know what structured warrants are, but for the benefit of those who doesn't, let me go through it a bit so that everyone can be on the same page before we continue. Okay, structured warrants is a trading tool. Specifically, it works more as a short-term trading tool. Okay, so it's not something that you hold on for an extended period of time. And how structured warrant works is that the price of structured warrant moves according to the price movement of the underlying. And there is two types of warrants in the market. There is two types of structured warrants. You have call warrants, and then you also have put warrants. Okay, so what call warrant, how call warrants works is that call warrant price goes up when underlying price goes up. But for put warrant is the opposite. Put warrant price goes up when the underlying share price goes down. Okay, those are the two types of structured warrants. And it's pretty straightforward, right? So structured warrant price is dependent on the price of the underlying shares. Okay, so one of the main attractions with structured warrant among investors is that it can boost up your return. It can give you a multiple return on your trade as compared to if you're buying the underlying shares directly. This is because structured warrants price is just a fraction here. It's just a fraction of the price of the underlying share. So small price change on structured warrant can mean big percentage return given the warrant's price. Okay, so that's how structured warrant works. The warrant can give you an amplified return on your trade because of the smaller price of structured warrant as compared to the underlying price. Okay, great. I hope you understand that one. If you don't, please feel free to ask any questions, and then we'll try to answer those as we go along. Okay. All right. Now talking about the price of structured warrants. This would be for the investors that are quite familiar with structured warrants already and know what structured warrant does. But there's a couple of things that you are not familiar with. Today, I'm going to touch about something that not many people are aware of. Basically, we have gotten investors who say that they don't see any changes in the price of the warrants when they see changes in the underlying price, right? Okay, in this example here on the screen, I'm going to refer to the Maybank Warrants website. On the screen here, you can see a page from a technical chart from the Maybank Warrants website, okay? And the example I'm using here is for my EG. This is the latest chart of my EG. And let's zoom in into the most recent part of this chart here. Okay, so this is the most recent part of the chart. You can see clearly that the price of the underlying share, my EG, has been declining, right? It's been declining here. All right, you're looking at my EG and the share price of my EG has been declining. And something in your mind triggered you to check on the structured warrants of my EG. Okay, let's see if you are checking on the structured warrants of my EG. You then go through your trading platform and you search for my EG warrant to see its price, right? So once you've gotten to that page, it doesn't matter which trading platform that you use. You can access Maybank warrants from any trading platform, and it will be available on those platforms, and then you can search for those warrants. In this case, it's my EGC2Y. Okay, you can see here it's my EGC2Y. Let's say you've reached the warrants page on your trading platform, okay? And you check on the price here, okay? And you see, hey, there's no changes, right? It's 15 cents, it says here. And there is no changes to the price of the warrants. But just now you saw with the chart that the underlying price has declined, right? Quite a bit just now. My EG price that you saw in the previous slides in the chart, my EG price has already gone down quite a bit. So there's no changes when you look at the price over here. So what is happening? Okay, quite a number of investors were wondering this one and asked the question to us as well. So if you want to know why, this is because this here, the 15 cents here is only the headline price, which means this price, 15 cents over here, 15 cents over here represents the last traded price of that warrant. And this would be an inaccurate way to value the warrant, okay? This price should not be used, you should not use this price to value your warrant. This is the last traded price. Because this is the last traded price, this warrant could be last traded on maybe a few hours ago or a couple days ago or even weeks before, all right? Meanwhile, the share price has moved up and down since then without anyone buying or selling this particular warrant, okay? That's the reason why. No one bought or sell this warrant during the period where MyEG shares were going down just now, you saw in the previous slide. And the headline, the last traded price remains at 15 cents. This is why there's no changes in this last traded price. This is unlike the usual stocks that you see in the market, because usual stocks that you see in the market, this price changes quite a bit because usually stocks will be a lot more frequently traded than structured warrants, okay? All right. In order for you to know the actual value of your warrants, you will need to go in a bit deeper and check on the bid and ask price of the warrant itself, okay? Here is where you see the bid and ask price of the warrant itself. On any trading platform, you should be able to see this bid and ask price, but you have to go in a bit deeper. If you only saw the price of the warrants on your watch list, you'll not be able to see the bid and ask price. You have to click on those where you will go into a section where you'll be able to see the price, the bid and ask price of the warrants itself. Okay, this will represent the updated value of your warrants, okay? For example, let's say if you own 100,000 warrants of MyEG C2Y and you want to know what is the current value of the warrants, this one will not be the way to go. You'll need to check on the bid and ask price and find out what's the latest bid on the warrants. In this case is 0.045 cents, right? So your 100,000 warrants would be valued at 4.5k ringgit instead of at 15k ringgit. Okay, so this is something that you need to be aware of when you're buying structured warrants, whereby you need to, in order for you to value your warrant more accurately, you need to check on the bid and ask price instead of relying on the last traded price over here. Okay, so it's important for you to observe bid and ask price rather than the headline price or the last traded warrant price. Okay, and while you can do that just now through your trading platform, but instead for a more warrant focused platform, you can also check on the bid and ask price using the live matrix, which is available for Maybank warrants on Maybank Warrants website, as you guys can see on the screen here. This is the snapshot of the live matrix on Maybank Warrants website. Here you can see the bid and ask price, the latest bid and ask price, as well as the latest price of the underlying shares as well. In this case is 88.5 cents is the underlying price, bid price, and the warrant bid price for the underlying at that level would be 4.5 cents. Okay, so, and you can also, aside from seeing just the live matrix, you can also see all the other warrants details as well. The sensitivity ticks, effective gearing, the listing date, expiry date, and all the other details of the warrants is available on this page, warrants term page on the Maybank Warrants website. So it's more convenient and more useful if you're looking into specifically structured warrants rather than just the bid and ask price on the trading platform. Okay, all right. This is the thing that we want to share with you today so that you are aware of the difference between the bid and ask price as well as the last traded price when you're looking to value your warrants. Okay, now to prime you to think about structured warrants when listening to Nick's session in a second. Okay, consider this. Structured warrant is a trading tool, right? And its price changes according to the price, according to the changes in the price of the underlying, as I mentioned earlier. Okay, so when you're going to decide to buy structured warrants, it's always best to analyze the underlying shares first, correct? So for example, if you want to buy hibiscus warrants, you would take a look at hibiscus, the underlying shares first, before buying the warrants, right? And some of the way that you can get some idea on the potential of hibiscus, the underlying shares, through some of these methods. You have fundamental analysis, you have technical analysis over here, and then you have the news flow in the market that you can get from Google News or any news platform. And you also can get ideas from Maybank website and Telegram as well. Yes, Maybank has a Telegram channel, and we highly encourage our investors or any investors to join the channel. You'll get a lot of information in terms of technical analysis recommendation, fundamental research recommendation, warrants ideas. It's all available on the Telegram channel. At the end of the webinar, I'll give you a code so that you can scan through and register on the website itself, on the Telegram channel itself. Okay, so when Nick show you the potential of some stocks using technical analysis later, you can have some thoughts at the back of your mind about exploring structured warrants for those underlying. Okay, so this is what we intend for you to do later on when you take a look at Nick's session later, when he suggested some of the names that looks good and potentially bullish. We want you to keep structured warrants at the back of your mind and explore those hand in hand with the underlying shares itself. Okay, because why? Because structured warrants actually requires a lot lower amount of investment capital required, and it has a leverage effect on your return. So if the underlying share price goes up by 5%, for example, structured warrants for that particular underlying can increase maybe 12 to 12%, for example. So there's a boost to your return. So if you're looking for a short-term trade with a boost up return, structured warrants is one of the best tools that you can explore actually. Okay. All right. After next session, we're going to take a look at a couple of past cases where we can illustrate the value of this method in relation to structured warrants. Okay. For now, I'm going to pass the session to Nick first, and he's going to go through all the technical analysis right now. Okay. All right, Nick. Over to you. I'm going to stop sharing my screen.
Thank you very much, Ihsan. Good afternoon. Assalamualaikum. Selamat tengah hari semua. Thank you very much for participating for today's event. So the idea for today's event is actually I'm going to walk you through into so-called technical outlook of the key major indices, Malaysia and global in general. And then we're going to relook few of the stock that we are recommending earlier, which currently still pretty much trading at, I would say, continue in the uptrend. So I'm going to highlight, pinpoint which level that are attractive for, accumulation, profit taking, and so on. So we're giving you an idea, whereas you can combine with the structured warrant to enhance your portfolio in terms of looking for the so-called opportunity to make a profitable trade in the market. So for now, I'm going to share my screen. For today's session, it's purely going to be technical. I'm going to show you the chart for SPX, Vix, and so on. So if you have any question, feel free to ask in the Q&A box, or you can just write in the chat box. All right. Waalaikumsalam, Syekh Zulkifli Jaafar. All right. Okay. Let me share my screen first. All right. I think you should be able to see the chart that we shared on the screen right now. This is actually SPX chart, S&P 500 Index. It is actually the chart that I published on the report earlier on Monday morning. So in a nutshell, in this report, I mentioned about the volatility in general has started to ease. So I am seeing there are potential for the so-called rebound to occur. All right, over the past 3 days, the S&P is actually trending much more lower. All right, it actually break below our immediate support at 4,000 actually. Last night quite pretty much brutal in terms of their decline. However, the divergence signal remain intact. Divergence mean whereas momentum, forming as in terms of structure, high-low structure, that means pinpoint that there is a significant improvement in terms of the overall buying interest and so on. While the index or the asset class that we go plot against is actually creating a lower high structure or lower low structure. So in that sense, often the divergence signal often preceded by the if not by a reversal movement, but at least followed by a rebound. Now, over the past few days, the market has been declining. I want you to take a look the performance of Vix index over here. Vix stand for volatility index. So this CBOE Vix index also have another name they call a fear index. So in terms of the fear index itself, the idea is if the Vix index goes up, the S&P 500 index will come down. So it is an index to measure, to track the so-called volatility in the market. If you're trading option, it's going to be pretty much one of your key benchmark index to look into. Now, the good thing about what we call the VIX index is actually it gives you a sense how high the volatility can goes up. Now, if you look on general VIX movement since earlier of the March 2020, where we saw the VIX index has peaked all the way up at 80 points and S&P has come down to 2,300. So that means often the peak movement in VIX often followed by bottoming in a market. So as you can see here, the VIX has not been trading at the highest point yet. But it has been testing the key support at 37 point over the past, I think, since November. So every time it's tried to spike beyond 37 range, it kind of make a full, pullback. So what happened afterward? The market start to rebound, and eventually, you see a series of the VIX has been, on the high, a little bit on the elevated side, because you can see here over the past last year, mostly we've been trading below sub 20-25 point, but now over the past 4-5 months it has been consistently trading above 25 point. So that means the current volatility is much more higher compared to last year. Now, interestingly, every time VIX try to go beyond 37 point, there is a so-called multiple rejection. You can see in the candlestick pattern itself, there is a multiple rejection in terms of the long series of tail that being formed in the chart. Last night, despite trading lower for the S&P 500, you can see the reaction of the VIX is not really exciting. So in that sense, that give you some indication that the selling pressure has a lesser intensity compared to before. So because of that, I do believe there is pretty possible for the S&P in general to stage a rebound soon. Now, I'm going to bring you into what we call that trading view. I want to do some drawing over here. Now, let's talk about the trend. While the S&P 500 possibly, going to stage what we call that a rebound. Is this going to be a rebound, really a rebound, or is this going to be a full flat out reversal kind of signal? Now, if you take a look at the recent cycle, the last down cycle has ended in what we call it 2020. So I do believe the start of the current prolonged what we call that uptrend is actually pretty much a new so-called upcycle in the larger cycle of the 10 years or 12 years kind of cycle. However, we are seeing a so-called correction right now, which give us a little bit moment that we think they could actually trade much more lower. So if you take a look at the pattern over here, there is an eerily similar pattern of something that we call falling wedge kind of pattern, which often followed by a reversal signal that the market going to continue to trade higher. But right now, everything still pretty much shaky in terms of signal. The reversal signal is there, but it's not that strong enough. So my expectation is for S&P index, it is need to break above 4,300 and 4,400. So this is pretty much a key resistance level right now. That means a failure to break beyond this level not only going to confirm that there is a lower high structure, but also make a confirmation of the recent death crossover between 50 and 200-day moving average. So in event that there is a rebound for the next few weeks ahead, any rebound there is what we call that has a lesser price velocity. That means wherever you saw multiple candle rejection within this zone, I mean, it could give you some sense that perhaps it could be a good time for you to start to sell on strength. And then it is possible for the S&P to trade much more lower. So I'm looking at possibly next support is actually at 3,800, right, for S&P. Beyond that, if 3,800 is going to be taken out, that means there is a strong possibility for the index to trade much lower. For now, I think we have to approach the market with a little bit on neutral. It cannot be too pessimistic. It can't be too optimistic. I mean, as a chartist, you want to see how the chart start to evolve, whether there is a so-called reversal signal coming in, or the market just merely going to continue the current short-term downtrend. Pretty much right now, in terms of trend structure, it has been broken. The scalar bull is no longer there. It's just question whether the current correction is actually has ended, or it could have more downward to go. So the key level that you need to watch out is currently, I think it will be at 3,800 for one, and 4,300. So I believe there could be a rebound, but if the rebound failed to break beyond 4,300, I do think that for the S&P 500 could test a lower support at 3,800. And if this broken 3,800, then officially the S&P index going to enter the bear market territory, which at the currently, I think at the low, we are losing about 18%. So we are about another 2% away from the bear market territory. All right. Okay. Now, let's take a look the other index. Quick look on NASDAQ. All right. So is NASDAQ going to come down further or not? So we seen a so-called an argument, a rotation between a growth stock versus the value stock. Growth stock being known by the tech stock are known as a growth stock, whereas there is a stellar performance over the past few months, particularly last year. So the correction that has been ongoing right now is quite steep versus the value, particularly when you saw Federal Reserve has started to raise their interest rate. We also raising interest rate yesterday, and that could be a series of higher interest rate moving forward. That's one thing to curb the current inflation. But given the current situation, we talk about ongoing geopolitical crisis between Russia and Ukraine, that going to create a so-called some disturbance in terms of the overall market supply, particularly on the commodity side. So we have been hit by higher commodity price and also higher interest rate. And because of that, there could be a so-called a concern that the recession is particularly coming. Particularly if there is another signal I think has been triggered over the past few weeks. The signal can be used. I think you leave it to your interpretation how you can take it. Whereas the so-called we call it yield curve, inverted yield curve. That means the long term has been rising above the short term has been rising above the long term. That tell you that there are potential recession coming in. So with that concept in mind, I think we have to approach the market with pretty much a little bit caution. However, short-term trading is still pretty much possible. I think in terms of the trading sizing, you may want to reduce the sizing of your portfolio, but every time you entry, for example, if you buy with 500 lot, maybe perhaps now you buy with 200 or 250 lot. It can be same, but regardless, I think there's still pretty much plenty stock that are looking good when the market doing like this. Particular stock which have offered quite a great decent dividend yield, and with the higher interest rate environment, banking stock become what we call much more attractive. Now, for NASDAQ, my expectation, if you take a look at the signal on the momentum itself here, the reaction of our RSI here is pretty much muted. Okay, it doesn't even break inside so-called the oversold territory. we have a steeper reaction in terms of the price decline over the past few weeks, but the momentum has not yet even that into our territory. So that also gives some indication that there could be a potential rebound as well. Now, we going back to the different fact index. I want to bring you forward to the Hang Seng. Hang Seng has a quite a very interesting moment. We have so-called a lockdown in Shanghai over the past few months, and there's a rumors that what we call that there could be a reopening soon. Now, the reason I think why Hang Seng is now very, very attractive, because let's take a look at this one. This is the weekly chart of Hang Seng. This data span back until 2006 all the way in the current level. Now, if you notice the recent low on the March has been tested. The last time this low has been tested was on January 2016. We have 12 June 12, and we have a quick what we call that lower breakout in 2015, and all the way up here until 2010. So we are talking about multi-year or 8 years kind of support. So even if you draw a simple Fibonacci 2 over here, you get that the market or the Hang Seng right now is being trading with its so-called a major support zone between 61.8 Fibonacci level and 70% AWG line. All right, so this, I would say, create a strong buffer for the market bottom. In event if the Hang Seng break below this level, that means they are most likely going to test the lowest point during the global financial crisis. For now, you can see a rejection, and right now it could actually creating even testing again. But I do believe Hang Seng right now trading at a quite attractive level, right? So because of that, I think maybe I think I'm not so bad overall. If there is a so-called correction in the US market, fund could shift over coming back to the Asia. So fundamental factor could be China. Some fundamental factor can be Malaysia as well. All right, Malaysia in general is pretty much a defensive market. Now, later I'm going to bring you on the KSCI itself, and we can take a look whether the KSCI can absorb the current volatility or not. Now, for Hang Seng, I think at the current level, it is quite attractive to look in, particularly the big cap stock that has been trading quite so low. You can take a look like Tencent, Alibaba, JD, and so on. But beyond that, I think that can be more selective later. But for now, in general, Hang Seng, I think, do offer quite a attractive entry point at the current level. Now, I want to bring you to take a look on this one. The one of the index that going to determine our life, whether going to be better or not, because this is actually DSY index, stand for dollar index. So if you notice the reaction on the USD ringgit recently, ringgit has been weakening for quite some time, largely due to what we call a strong gain in the dollar. So dollar with the Federal Reserve rising the interest and so on. So the reaction of the dollar index is expected. You can see a strong parabolic kind of rally, and right now the dollar index has been trading pretty much within the key resistance level. So if we do another simple Fibonacci level, you can see now dollar has been testing this so-called 61.8 resistance level for quite some time, and this time it has been broken through, and if the dollar build a new base over here, it could actually surge higher, looking to test 108 and the next key resistance at 120. The last time it hit this level was 2002, about 20 years ago. So that can be a little bit scary. Now, if you look back on the ringgit, so let's see ringgit. Ringgit now in the level where there are significant threshold, testing what threshold. Now, my concern, I think about ringgit, I think there's some rumors, news or viral that ringgit can go for 5 ringgit, or it can be. There is a rumor that the ringgit going to be weakened further up toward 5. But if you look at the chart here, the possibility is there. Although right now, I think is still pretty much in the consolidating mode. So it has been tested this level, okay, 4.3, 4.4, and I think 4.5 is going to be a very strong resistance. All right, Bank Negara has take initiative to raise the interest rate quite early, and there could be additional 5 more interest rate hike incoming for this quarter and up until next year. So because of that, that could give some relief for the ringgit. So I think the downside risk for ringgit could be kept, particularly at 5.50. And if you look the recent movement of the momentum here, it has been traded in the overbought territory, 1, 2, 3, 4, 5. So if you look at the reaction on the overbought territory, there's I think only on 2015 to 16 that the ringgit stay in the overbought territory for quite some time, but in a recent kind of movement, the steepness of the momentum over here tell me that it is look a little bit topish. So there could be so-called ringgit could actually ease off a little bit, strengthening perhaps at 4.2 in the near term. But for now, I think the downside is again going to be kept at 5 ringgit and 4 ringgit 50 cents. If somehow we can take those out, then we have to revisit whether it is possible to go beyond 5 ringgit or not. For now, I think upside can be kept. So that's for ringgit. So quick look on the commodity, two commodity, Brent and CPO. For Brent, it is quite interesting. There are a few pointers that I would like to highlight. For Brent, earlier my expectation that the oil price is actually on the wave 5 expanding diagonal kind of pattern, which actually has been has been blown out and out of proportion. And you can see here the result at the oil price goes up all the way until $140 and now has been in the consolidation. Now this so-called consolidation, it could be a characteristic of the wave 4, a larger 5 type wave of using elliott wave kind of model. Often this kind of constellation are reflection of the wave 5, which means there are possibility of the oil price to go beyond what we call the current level. If the oil price goes beyond the current level, then going to create additional so-called inflationary pressure. And also for us, I think we are pretty much okay with the inflation. It's still high because we still paying around 95 at 2 ringgit and 5 cents. Right, around 97 is already 4 ringgit 37 cents. Imagine if around 95 trading at 4 ringgit, then you can see a triple whammy kind of reaction on the market. So I think right now government still continue subsidizing what we call that for the oil price. So looking at the price, I do believe the upside, if you look on the weekly chart over here, despite so-called consolidation here, if you really look on the what we call that weekly chart and look on the bigger term, look far on your left, you can see there's a plenty of resistance over here. Okay, all the baseline they've been created since 2011 up until 2014 has give you a strong sense of the resistance zone. So in reality, you are seeing a similar curve level. And in terms of the momentum for the weekly chart, you can see here, the RSI has dipped below the moving average. So that means in terms of the momentum has still pretty much has been weaker. Granted, there are plenty of support, particularly within 100. But eventually, if this 100 can be taken out, I do think crude oil could trade lower. So to summarize, I think I do believe despite a so-called consolidation nature, chances are for the oil is actually pretty much looking to trade lower, particularly revisiting the 200-day moving average at $90. Right, so I think the oil price could ease a little bit. So in nature of the what we call it CPO, right? I have I think I'm going to go against with a lot of the so-called people in the market that is saying that the CPO is bullish. I think long-term trend, while look still pretty much bullish, it has peaked. I think it has peaked. One, because you see the reaction on the CPO here. as creating so-called a double top. Now, double top, in order to validate this pattern, the pattern itself need to break a certain, need to hit certain level. And those level, we call it a neckline. So the neckline for double top pattern will be lies at 5,300. So only once this level being taken out, then we're going to confirm for the double top pattern. For now, we're going to call it double top in progress. So I do believe, because this double top pattern, and if you cross check again on the bigger time frame, particularly in the chart, and you can see here the reaction and the momentum itself, the recent peak again have a lesser intensity. So because of that, I do think CPO could actually kickstart a new correction move. So correction, that mean rather than continue to goes up over here, I do believe CPO could actually looking to test a lower support, particularly within the 200-day moving average, and also the double top kind of neckline within 5,400. So any upside, I think going to be capped. I think the nature of the trend for CPO, despite long-term stay uptrend, I think it could take a break, and we're going to see a correction coming in soon. All right, now I'm going to open up chart for quick look on the Bursa index and also certain sector. So for KLCI, now let's talk about KLCI. There is a great concern if the S&P trading lower, can KLCI actually trading lower as well. Now, if you take a look at the chart for KLCI, it has been in the sideways for the past 2 years. And you can see here, there is a strong and firm support and also resistance within two levels at 1610 and also at 1480. Now, with a higher interest rate kind of environment and another 5 more expectation of the interest rate by negara, banking stock going to benefit from that. Any increase for 35 basis point going to increase their, I think, net margin by 1 to 3%. I think you can get full detail of that from our today's report, banking stock sector update. Now, the thing is, banking stock represent about, I think, over 35% of the KSCI in general. So because of that, inability for the selling pressure to break below 1,480, I think going to be a little bit challenging. And given the defensive nature of the Malaysian market in general, and possibility of the election, whether this year or next year, or until finish the term and so on, we do not know. So since the rumors still ongoing, I think the support at 1480 going to be quite firm. All right. And if you recall, over the past few months, we have quite a steady inflow of the foreign fund, and that tells us that where there is a higher volatility in the others market, and Malaysia seems to be what we call that offer what we call that defensive nature, of a little bit of an escape from that. So that means a lot of the fund actually start to come back in Malaysia, largely looking into banking stock and recent rally in the protection stock, mostly from the foreign fund as well. So I do think the downside risk for KSA could be kept. So in event there is a greater volatility in the market, the KSA could come down lower. Perhaps Ihsan later going to highlight warrant that going to offer you some significant hedge, or you can just outright buying a put option. Now looking on the sector in general, small cap first before we relook on the what we call that other sector. Small cap, I do think is still pretty much on the uptrend. It has been in the sideways for quite some time, and there is a good and bad thing. The good thing is that sideways tell you that the support at 15,200 is quite strong. It has been tested at least 1, 2, 3, 4, 5, 6, 7 times over the past 12 months. So that means this support is very, very strong. Now I think we just seen a little bit setback for the small cap. That means downside risk, it could be capped. I think there could be another few more percent downward for the small cap. But beyond that, I think there's a decent chance for the small cap they're going to build a new base and re-challenge again their recent high. You can see here high structure stay pretty much intact, and I think they're going to retest again this level and perhaps the all-time high at 17,400. For small cap, I think it's still pretty much okay. So our market right now has started to have a so-called transition, whereas previously it was investor kind of environment, but now we see more trader, more trader in the market. So I think that improved liquidity, one thing, and that's actually making the life like us, a retail investor, retail trader, become much more easier. Now, small cap look like downside it could be kept, potentially to go out further. And I think among all the so-called sector, construction look quite promising right now, particularly after recent breakout above 200-day moving average, the red line here. They create a new higher low structure, complete so-called return move, and now you have a golden crossover between 50 and 200. So all the classic signal, the momentum is pretty much weak, but you can see the rejection that happened 2 days ago. So I think the construction could have more room for further recovery here. Consumer is pretty much flat. Energy, I think you have to be a little bit selective. It's still going okay, breaking out over here and look like the creek goes at least a little bit higher. Finance definitely pretty much uptrend intact. Healthcare continue to have a rejection within 50-day moving average and look like to create a new lower structure. Industrial product, I think just breaking below the 200-day moving average. Recently has tested and now have, I would say, breaking below new base. So industrial product stock in general, I think you have to be more selective. Now, plantation, I think the recent rally has eased. I think any spike or any event of rally that we're going to see over the next few weeks, if there's any, I think it's a chance for you to liquidate on strength. The reason why I say that, because I am seeing this. So the opinion might not be popular, but what we've seen is actually quite a bigger display of the divergent kind of movement. So we have 3-point divergent over here and 2-point the index movement here. So because of that, because of this divergent, often preceded by the correction. So I think plantation could actually test a lower support and perhaps revisit the 200-day moving average again. For now, I think because the momentum over here, you can see the spike here, it could stage a rebound, but the candle, last week candle, this candle is big and the gap here is big. And let's take a look here. Sorry, let me zoom in a little bit. Now, if you notice, you saw multiple gap over here and the ending here. This is interesting. You have seen a gap, this one, and a gap, this one. So you have 2 gap. So often 2 gap on left and right, preceding by the declining candlestick over here. This is something that we call an island reversal signal. So island reversal often occur at the top of the kind of rally. So because of this island reversal, I am fairly convinced that the correction in plantation stock sector in general could start. And right now, I think already in progress. So if you have plantation stock, stay in the profit. I think any rebound here is actually a chance for you to trim your position. All right. Now, property is pretty much still on the decline, but still in the sideways. So you are looking to buy at the support level. REIT actually doing quite well. It is rare for the REIT to break above 200-day moving average. And not this one briefly break over the past few years testing. But recently has strongly break and in fact has built a new base. So because of new base over here, I am fairly certain that there is the new upcycle, particularly for the REITs. Tech stock. Now, let's address one of the major concerns. So tech stock, for those who follow me on the Facebook, I did some sharing earlier. There is a 2 side of coin where you are seeing inverted head and shoulder pattern. At that time, I mentioned this short term stay pretty much in progress. And initially, when you saw current movement, the shape of the next, the latest shoulder can be a little bit bigger. And unless they create a new lower structure, this pattern will no longer be valid. Now, because of inverted nature of the head and shoulder pattern, it mentioned that the sector itself going to have a reversal move and could continue the uptrend. But if you relook on the bigger time frame over here on the weekly chart, you are seeing another head and shoulder pattern, particularly on the grander scale on the bigger time frame. So because of that, there are fixed, so there are quite a mixed, signal which side we should take, whether on the upside or the downside. Now, if you ask me on the big cap, on the bigger time frame, weekly chart, there could be some sort of support. All right. So the red line here is not 200-day moving average, but 200 weeks. So that means it is super long-term kind of support. So at least give you some buffer in the near term. So I do think it is possible for a rebound, but the trend is actually still pretty much, bearish. That means unless they're going to, break the 50-day moving average over here, build a new base, then I think at that time I can turn bullish. For now, I'm going to, observe from afar, all right? Despite, there could be a significant, trading profit, potential profitability that you can trade between here and to the immediate resistance. I'm not going to turn bullish until I'm seeing a stronger baseline above the 50-day moving average and a new higher structure. So once I saw that kind of signal, then I'm going to turning bullish on the technology. It's okay to be a little bit late for me because we are dealing with the risk and risk. Often, if you want to be a hero, you have to take quite big risk. But then again, the trend is still pretty much down. So if you want to buy, I think for short-term trading, while it is pretty much possible trading at a support, I think you have to be quick when you want to take your profit. Okay, failure to break the recent resistance. Anything you saw candlestick that have a rejection, then I think you can take a handbrake and close their position. But beyond that, before for me turn bullish, I need to see more evidence. For now, I think short-term rebound it is possible. Now, transportation is actually pretty much doing stay okay. I think transportation still looking okay. Telco, we've seen some recovery earlier, but trading pretty much at the support. And lastly, interestingly, utility. Utility has, particularly Tenaga, has been trading at quite low price. But you can see here in the chart for utility sector, there is actually so-called a baseline we created at 50-day moving average strongly. So I think there could be further recovery beyond that. Now, let me quickly go what we call that list of the stock that I think that we are having recommended much more earlier. I think this stock look okay, so let's take a look. There is a question. Can you comment technical chart sector and technology plantation? As I mentioned for now, plantation, I think they're going to have a correction, right? Long term, I think right now you're going to experience some correction, so I can a little bit tricky. If you want to go long term, I think you can buy at a much cheaper price. So right now, I think it's a level where you should think to reduce the position. And on the technology right now, it can be tricky. It's been trading at a key support level. There is no significant reversal signal. The Nasdaq is still pretty much weak. And if you want to trade, I think for short term, I think you go ahead. But long term, I think you have to wait for the stronger, what we call that indication. Now, if we talk about what we call that fundamental, despite looking attractive at the current level, you have to be aware that there are numbers of times that there are number of revision has been made, particularly on the evaluation. One, because technology stock, I think over the past few years have been traded in the premium area. So right now the premium has been eased. So one of my colleague technical also had mentioned that there are potential for the growth stock or the tech stock will be revert to mean. That means, for example, just draw something here. This is the trend for tech stock, for example. Okay, this is the the movement. So initially, expectation there are for the growth stock to revert to the mean price. So that means you can see further correction on the tech stock for now. Okay, so I think it can be a little bit tricky when you want to really look on the long term. But now I think if you want to go long term, I think you have to, rather than focus on sector, go selective by the stock itself. All right. Okay. If I got time, let me revisit gold. So quick look on the hibiscus. Hibiscus have been doing quite well. We have been recommending quite a number of times already, hit our target. And right now, if you can see at the current level, today's price, of course, 12:30 not complete yet the candlestick over here. If the candlestick complete at the current level, that means this is actually a sign of weakness. Sign of weakness, that means there could be a pullback, and the pullback, I think, if you take a look at the trend here, still going strong. So a re-entry at 1 ringgit 22 cents is pretty much possible. Beyond that, I think hibiscus still looking quite fantastic. The next is still on the consolidation mode, right? The good thing, is uptrend is still pretty much intact. Not so good actually. It is on the sideways. The good thing is still trading fairly above the key support level. So as long this support being respected, I think there's a decent chance for the DNX to continue their uptrend. CIMB has been rebounded off their support level. Of course, there is a quite a sell off here and here, but with the ongoing interest rate, I think you can take a look. Most of the banking stock has been recovering right within their key support. Major support level. Data Sonic has been going up quite strongly recently. Has built a so-called a new baseline. But if you take a look the pattern over here, they could actually create a so-called short-term minor correction. So if you want to buy, I don't think current level is a good level to buy. You may want to buy at the lower level here. EcoWorld also been trading at the support. As per yesterday, it has been trading here. So as for today, it has been broken below the 200-day moving average. So for the first time since December 2020. So if there any follow through by using classic John Murphy rule, 2% penetration of the trend line or 3 days rule. So I think today is if by Monday, next Monday, is still trading below 200-day moving average, I say the attracting the stock is no longer there. So if you don't have any position, for me, I think it should wait out for a while. Look if there any possible for a reversal movement, particularly when I see they're about to test a key support level within 82 cents. IGM is a stock that we highlighting 2 days ago. And if you look at the pattern here, it looked quite well. You've seen a gap here being closed. You've seen a bullish reversal signal over here, a new baseline, and a classic pennant pattern. So pennant pattern often occur during the uptrend. So I think IGM has a decent chance to trade much higher. Sign pretty much on the sideways, but if you look at the structure here, it has been turning much more gradually, much more positive, right? Granted, this so-called big cap stock may not attractive to buy for trader, but perhaps you want to, really on their so-called warrant. Sunway 2, okay, stay pretty much on uptrend. And recently we highlight YTL Power. One of the good things is actually because the same pattern that we saw, a pennant pattern, and you can see here the downtrend line has been broken. So because of that, we expect YTL Power to trade a new or the uptrend kind of movement. BJ Auto remain our favorite, one of the few stocks that the uptrend level remain unbroken since at the start of the COVID. So we seen certain setback earlier, but we see a new high structure, high low structure, and that pretty much it. So I think despite little bit on sideways, the trend is looking quite fantastic. Now BJ Food, there are a few things that are going to be very interesting. We have been recommending the stock much earlier, and we recommend it again. But sadly, our earlier, I think like last week, kind of recommendation has tanked because the stock has a gap down kind of movement here and break the immediately our stop loss level. So that means we are step out. But if you want to initiate a new version, I think it's pretty possible, particularly when they just announce your bumper or got that result yesterday. So you can read in our latest report for Bujaya Food today, the strong earning for this last quarter. So that means the trend is looking quite promising. The gap up today's movement is tell you that the trend is pretty much intact. So I think if you want to initiate, as long as the stock remain above the recent support, I think it is possible to continue to trade higher. I think the fundamental value target price that we set, I think over 5 ringgit. Okay, kawan is few stock that I remain like, because one, break above the downtrend line, a new baseline, break rebound above 200 moving average, and I think this is going to gradually turning much more positive. Based on yesterday's scanning, I saw outcome, but I did not put in the report because I want to see how does it evolve. So I think for short-term trader, it is possible as long they can break immediate high at 1 ringgit, above 1 ringgit. Taliwork also doing quite well, slowly and gradually. So one of the few stock which is, I would say, slow in nature but quite safer in terms of the trend movement. And last but not least would be Power Root. Okay, strongly upward movement. There is a new high characteristic, and the overbought reading here tell you that the stock is effectively has ended the downtrend movement. So in order for the trend to change from downtrend long-term sideways, you need to put the momentum inside a strong overbought territory that going to bring out the stock out from the consolidation phase. So this is what happened with the Power Root. You can see a momentum is definitely hit so-called, I think about quite extreme level. So that actually tell you that the momentum has bring you out from this so-called sideways. So you can see here there's some resistance, and you can see breakout, come back, rebound again. So this is good indication that the stock itself is going to build up new higher low structure and looking forward to go for the upside movement. All right, last but not least, let me go back to the gold price. Gold price, my expectation earlier that I think in the early of the year, I highlight the gold going to go 2000, while it did go briefly. And this going to give you some mixed signal, because what we see here, a potential double top, and currently gold is trading inside so-called a corrective movement. So if you take a Fibonacci baseline over here, the gold is trading pretty much at the key support level. Right, so with the topic reading in the what we call that DXY index, okay, US dollar, there could be possibility for the dollar to ease little bit, and the gold could be rebounded. But I think the upside are going to be kept, particularly at 1,900. For those who've been trading gold, I think looking at to sell on higher strength, or if you want to buy, I think short term is still possible. But if today's, you can see here, this is a so-called reversal kind of the candlestick. If today's and the next day they did not able to sustain above 1840, I think there's a decent chance for the gold to trade lower. So it is important for this week for the gold to trade above 1890, because if you end the week by 1850 level, then you're going to have a slightly hammer pattern on the weekly chart. So at least give you some buffer and could station rebound. For short term, I think if you want to buy the gold, I think you can, but watch out for the resistance, particularly at 1,900. Beyond that, as we expect the dollar going to be strengthening, so the gold most likely going to languish lower, particularly within 1,800 region and 1700. All right. Okay. Now, I already cover on the global sector and so on. So let's just recap. Globally, we see the trend is not that well. We have a quite number of the concern. There could be, however, a technical rebound in the near term. The good thing is some Asian market looking quite attractive. Hang Seng in particular, Hong Kong. Malaysia in general remain defensive. Banking stock doing quite well. Construction looking good. Subsector like technology, technology not so much. Plantation could be on the correction right now. So I think rather than focus on the sector, I think you may want to relook on the specific stock which actually doing quite well, particularly when at the current market. I think when I do a stock tracking on a daily basis, I still can found a large number of stock. I mean, in general, if you look, I would say, hold on, let me just take a look. Okay, if you look on the market in general here, sorry, this is Hong Kong. Okay, I think right now we have about 1,000 stock, right? So right now, at least 250 stock been trading above 200. And sorry, 20 even within short term, there's still plenty of stock who are trending up. So there's still pretty much opportunity to trade in the market. So if you have concern in terms of the, you don't want to put so much fund to trade stock because the time quite volatile. So one of the best thing to do is actually buying the warrant. All right, so I'm going to pass over to my colleague so that he can highlight which warrant which are actually looking quite attractive and how you can take advantage of that. Back to you, Ihsan.
Thank you very much, Nick. Wow, that was quite a lot of information from Nick just now, right? I hope you guys were able to digest those information. There's a lot of tips, a lot of bullish call, a lot of bearish awareness from Nick as well. So right now I'm just going to share my screen first because Nick already gave us some of the names prior to our session today, and then we've already summed up the warrants that are available for those names. As you guys can see on the screen right now, I've marked some of the names that Nick has mentioned as being bullish or potentially rebound. Potentially there's some rebound on it or something like that. As you guys can see, a couple of, sorry, please excuse my handwriting because it's a bit odd to write on an iPad. So you guys can see here that hibiscus is one of the stocks that Nick mentioned just now to have a fantastic chart pattern. And there's a good outlook on the stocks as well. So you can take a look at hibiscus C28. It's something that Nick and research team as well as the Warrant team has been recommended over and over again over the past few months. There was a technical analysis by call, and our research will initiate the coverage. We're going to explore this one in the case study in the next couple of slides. Also, CIMB, banking sector, CIMB, one of those that Nick mentioned just now, the share price has already gone near to the support level, where there's a potential rebound in the next in the coming future. So you guys can take a look at CIMB, and alongside CIMB, there are other banking names that are getting positive outlook over the recent BNM increase in overnight policy rate as well. You guys can take a look at Alliance Bank Malaysia Berhad or even Public Bank, and these are the corresponding warrants that you can see on the screen here. Okay. All right. Also, Berjaya Auto, one of Nick's favorite looking company with a nice looking chart as well. And there's a corresponding warrants that you guys can see here, Berjaya Auto C23, and it's going to expire later on in August as well. So that's quite a significant time period before the warrant actually expires. You can take a look at that alongside the underlying as per recommended by Nick just now. And then you have Datasonic, which potentially closing in on the support level as well. And there's a potential rebound, including Ecoworld as well as now. Okay, there's a lot of names here. And one of the sector that Nick mentioned as being a bearish just now was the technology sector, because the chart pattern looks like the potential for downside is there. But I have not managed to include that in here in the list today. But later on, once the slide is going to be uploaded on the website, you will be able to see that we're going to include Inari HA as well. Inari HA. It's a put option because Inari tracks closely the Bursa Technology Index. And whenever the Bursa Technology Index offers the downside, Inari share price also moves downwards. So if you concur with Nick's analysis over Inari just now, over the technology sector just now, you can take a look at Inari's put option here. It's available on the warrants website, and you can take a look at all the details of the Inari put warrants. And another bearish trade potentially the one that Nick mentioned just now is the FBA MKLCI as well. Okay. So these are the names, among the names that Nick mentioned, also some of the names that I've included for the banking sector as well, ABNB and Public Bank. This slide is going to be uploaded on the website, on the Warrants website, and then you will be able to see all these details on the slide later on. You can download it straight from the Warrants website. Otherwise, you can take a picture right now or download the slides later on, either way. All right. And if you miss this webinar or any section of the webinar, we will have the recording up on the Warrants website as well soon. Okay. All right. Let's move on to the couple of case studies, past warrant trades that we're going to look at right now. And the one that we're going to focus on is hibiscus. Okay, this is an example of the past case where trading ideas from Maybank, technical analysis, news flow, fundamental research can be useful in trading such a warrant. So let's say if you're thinking about a short-term trade and also about using such a warrant, right? But you don't know how to pick up the underlying or how to use technical analysis mentioned earlier. At the start, maybe you can observe first all the information coming in from Maybank technical analysis, from fundamental research, from warrant ideas, before you actually dive in and get into the trade yourself. So you can rely on the information from Maybank Warrants team, research team, and also the news flow available in the market as well. So let's take a look at this one positive documented past example here of hibiscus. You guys can see that there was a Nick put out a technical analysis buy call with a target price around 97 cents back on the 3rd of January. This could be where you consider to enter into the trade over the buy call. And as we go along, you can see the warrant team also came up with a write-up and ideas on hibiscus as well. On the market information, including some of the news flow over hibiscus, where on the 13th and 25th of January, there are a couple of positive news flow on hibiscus about rising crude oil prices, as well as the company's acquisition of Repsol. And the company's acquisition of Repsol actually tripled their production capacity and improved the sentiment, the market sentiment over the company. So the price here, you can see over the course of the period of the recommendation, over the period of the news flow that Maybank Research and Maybank Warrants team covered as well. You can see the price appreciated quite a bit. And on the 17th of February, actually Maybank Research team, the fundamental research team, actually initiated a coverage of hibiscus with buy call at a target price of 70 cents. Okay. So this kind of information will actually make you aware of the condition of the company, which is important when you're buying a certain warrant. It's not just looking at the warrant itself. You need to be aware of the company's position in the market, the condition of the industry, as well as the overall big picture, and that will help you to make a decision either to enter or to exit the market. All right. So this here, we hope we'll be able to illustrate to you on how you can combine this information, technical analysis information. You have fundamental research information, and also some of the buy calls, some of the news flow that is being featured on Warrants Watch, as well as daily highlights on Warrants website. You guys can take a look at this and combine this information, and you have a better overview of your potential trade over such a warrant or even over the underlying itself. Okay, so another thing to note is when the share price of the underlying has run up quite a bit, and the warrant either became very deep in the money or very deep out of money. In this case, given that the warrant price, the underlying price has already gone up quite a bit over here, you guys can see as being marked by the number 6. What happens usually is the existing warrants will be very deep in the money, and then it will already become very expensive. You can see here, you can see on the previous slide where the warrant price is already at 27 cents, right? 27 cents, because the share price has already gone up quite a bit, and the warrant price followed suit. So the warrant was already expensive, and when this happened, what Maybank will do usually is Maybank will come up with a new warrant over the same underlying, And these new warrants will be better calibrated to the latest market price of the underlying, okay? Because this will result in a better performing warrant as well as better sensitivity with better tradability as well. So on the 28th of February, Maybank issued another warrant over hibiscus, and hibiscus, it's marked as hibiscus C28 as compared to hibiscus C21 earlier. All right. So if this is the case for some of the warrants that you've seen, where the share price already already increased quite a bit, and the warrant price also followed suit, you might want to wait for another warrant that Maybank is going to come up with, and it's going to be the warrant price is going to be a bit cheaper as compared to the one that has already run up in price. Okay. All right. Okay, so if you are new to structured warrants, this is actually one of the ways that you can warm up to the idea of trading structured warrants. You can follow all the trading calls, all the technical research, technical analysis calls, fundamental research calls, and warrants watch ideas over Maybank Telegram, because this is being posted on Maybank's Telegram. All this information is available on Maybank's Telegram channel and also available on Maybank Research website, also, as well as Maybank Warrants website. So you guys can take a look at this platform and combine the information and follow through the performance of the underlying as well as the warrants performance as well before you actually trade into those warrants that you're interested in. So for the more senior investors, you can benefit from the information flow relevant to structured warrants. You can, because all information, all relevant data on structured warrants is being compiled and being posted on Maybank Warrants website as well as the Telegram channel. Okay, so this is one example over here, hibiscus C28. We also have another example on boosted plantation, but I'm not going to go through in depth. It's pretty similar as to the hibiscus just now. But one thing to highlight here is that investors trading structured warrants need to be extra mindful of the potential downside when it comes to any underlying price that's already appreciated quite a bit. All right, as you guys can see on the chart here, share price has already gone up quite a bit, and there is a correction over here, right? So if you are a warrant holder, you need to be extra mindful and you need to be extra vigilant with your trade, because a warrant is a leverage trading tool, right? So your upside will be amplified. It also goes the same way with the downside as well. So if your upside is a multiple of is multiplied by 2 on the upside, it will also be the same on the downside side. If you lose 10% if you gain 10% on the upside, you will also lose 10% on the downside similarly. All right, with structured warrants, as compared to, let's say, if underlying is only losing 5% or 3%, your structured warrants could be either gaining a lot more than the underlying or losing a lot more than the underlying. So it's unlike trading with stocks, because sometimes stocks you hold on for a long term and a medium term period. Moreover, warrants have a maturity. Unlike stocks, warrants have a maturity. So you might not be able to wait until the underlying recovers because the warrant would have already matured. Okay, so in this case, you guys can see the maturity is on 31st of October. So if, let's say, the underlying share price does not recover by that time, or 1 month or 2 months before the maturity date, then your warrants could expire worthless. This is something that we need to warn investors out there to be mindful of. It's unlike trading stocks where you can buy and hold for a long period of time. Structured warrants is meant for a short, it serves as a short-term trading tool. So when you hold structured warrants, you need to be mindful of the movement of the underlying shares. Unlike stocks, you can just sit and wait until, if the share price goes down, you can wait until it recovers. Unless there's something happen to the company will continue to be on the market, and then you'll be able to sell those companies. But for warrants, there's a maturity date. So when it comes to that particular maturity date, you'll not be able to sell those warrants anymore, and you'll end up losing your capital as well. So it's something that we want investors to be mindful of and be able to avoid going forward as well. And I'd like to thank everyone and Nick as well for joining us. And hopefully we'll see you guys soon in our next session, technical analysis as well as warrants as well going forward. All right.
All right. Okay. I saw quite a number of the familiar name. Thank you so much for continue supporting us. Yeah. Marvin, I always saw you, Mr. Zo, Kak Iba, and everyone. There's a lot, familiar name here. So thank you very much for your support. Okay, we'll continue doing our best to give you the best idea, and hopefully you guys, continue to be profitable in the market. All right. Selamat Hari Raya. Thank you very much, everyone. Have a great day.